Hello and welcome to ETF Ecosystem Unwrapped. I'm Jamie Gordon, editor at ETF Stream, and I'm delighted to be joined today by Mark Fitzgerald, head of product specialism at Vanguard. Talk a little bit about how investors have been behaving amid sort of the volatility we've seen with Trump tariffs so far this year.
Yeah, thanks, Jamie. It's really interesting actually when we look at what's been happening year to date, because you've had this immense amount of volatility and uncertainty, and it hasn't gone away. And ordinarily, you might think that investors would pull back from a kind of cash flow point of view. But when you look at ETFs globally year to date, we've seen maybe $650 billion worth of net cash flow, which is absolutely staggering. The next sort of most successful asset gathering start to an equivalent point in the year would be around 450 billion. So despite this uncertainty, actually, there's been immense faith and commitment to the ETF vehicle. And at Vanguard, we always sort of caution that don't try to time the markets. When there's a lot of volatility, actually just look to the long term and just stick to your objectives. And that's what we're seeing, a lot of investment into core portfolios and incredible cash flow.
Also, but aside from the sort of core keeping it simple approach, a lot of investors, I should imagine, are trading pretty actively during this period of volatility, picking sectors, picking duration, things like that. What would your sort of message be to that kind of investor, trying to pick moments during volatility?
I think you just have to understand your own objectives and your tolerance of risk. Generally speaking, the Vanguard message, because of the types of people that we tend to serve, and we think about advisors, we think about the retail clients, the end investor, as we call it, we would just caution with, don't try to be too clever if you're thinking of using a niche product or trying to time the market. You're actually better to just cut through the noise, because a lot of volatility by its nature is short term, and it's very easy to get concerned and distracted by short term news and market moves. Just actually look to the long term and remember, why are you investing in the first place? And typically, for the types of investors that we serve, they're looking over multi-years, multi-decades even. So don't get too concerned with the vol.
One of the key discussions we've been hearing a lot on stage today is this sort of toing and froing between actives and passives, and especially in ETF land. And a lot of the conversation is around product development on the active side. Where would you say investors should sort of position themselves and their understanding in terms of this active-passive discussion within ETFs? Is everything going to become active? Should we get this excited about it, really?
Well, it is exciting, actually, because the industry is evolving and it's developing and maturing, actually. There's a long way to go in terms of market penetration of ETFs versus mutual funds. But we just would say, buyer beware. Just be careful. Not all strategies are actually suitable to put in an ETF wrapper. The core beta, the sort of the diversified liquid index strategies, they can do the heavy lifting. They should be the core of your portfolio. If you've got, depending on the advice you get and your objectives, if you've got a bit of risk that you can use, a bit of risk budget, there is a place for active strategies. Absolutely. You just have to pick them very carefully, because unfortunately, as we've seen over the years with mutual funds, a lot of active strategies are rather expensive and they don't end up delivering what the investors expected they were going to get, i.e. some outperformance. And very often you might see a drift in style from the manager. So there are a number of considerations. Just go carefully, but remember the importance of that core investment and letting the beta, as we would call it, do the heavy lifting.
Prudence and not rushing your decisions, I suppose. Mark, thank you very much.
Thanks a lot, Jane.